Now let's bring in Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, joining us from Santa Monica, California. Ross, thank goodness you're here today.
Yeah.
Dow's down 500. You know, we have Powell giving us the outlook. We have China tariffs. What do you think about this kind of sell-off?
Well, I think every time we've seen this, it's just a series of emotional reactions based off the tweets of an insane president. So, you know, you can't invest based off this. You have to just look at the numbers of what's going on and make your investment decisions accordingly. So when you look at the numbers, we still have a strong economy. Earnings have been, you know, very good overall and at least stable. Earnings haven't gone down. And we're seeing a huge wave of potential recession on the horizon caused by regressive global trade policies across the board, started by Trump. But the bottom line is he's failed in the trade war. I think we can just say it now. He's failed. This is a F. It's 18 months later, and you know he's risking a global recession now in the next year or two. And so I think on the short term we're okay, but you know we've got to get resolution of this one way or another.
Oh, be careful. He might give you a Twitter nickname for that comment, Ross Gerber.
I hope so.
Right? How about, I know, right? Then you really be super famous. What are your thoughts on Tesla?
Mooch.
You've always been, you and the Mooch, exactly. Mooch is certainly going out hard on the other side these days. What are your thoughts on Tesla? Because you always are notoriously our Tesla bull. Are you still feeling bullish on Tesla or less so? Because you had Einhorn basically saying Musk should step down. The second largest shareholder said Musk should step down. What do you think?
Well, Bailey Gifford didn't say that Musk should step down. They're disappointed in some of the decisions and leadership and communication, which I am too, but I think that's been somewhat rectified, and I've worked closely with Tesla on their messaging, and you know they're very concerned about making sure the public gets the right message. So you know, first of all, Tesla is the most well-positioned company for the trade war of any company in the auto industry and technology, with the Gigafactory in China being completed actually as we speak. They're going to be able to start production this year, and that will get around the tariffs. So every other U.S. car maker is at a disadvantage to Tesla in doing business in China, as well as their expansion continues. Sales have been great. They're going to sell over 100,000 cars this quarter.
And they got the production out. I mean, they really got the production out. Everybody was worried about whether or not they would pump out the vehicles. They did exactly that. So at around, what is it, 212 roughly these days, what's the upside to this stock? Where do you think it could move?
Well, you know, we're long-term investors, so the upside of the stock is almost unlimited when you think about climate change. I mean, today alone, the fires of Siberia and Brazil are burning up. One of the most important things are trees in cleaning the air from carbon. And so we're seeing very troubling things happening on a weekly basis where every country in the world is pushing that we need, other than the United States, but we need to have an infrastructure that doesn't emit carbon. And Tesla is a solution for this. And it is the only pure solution for this in the auto and EV area here. So we're very bullish on their long-term prospects. And I think it's got a ton of upside.
I want to get to Disney, but I thought your IAC pick was an interesting one I don't hear as often, Ross. So why IAC?
And actually, I haven't really disclosed this pick yet, you know, on TV. So you guys are the first.
We have an exclusive. I like it.
Yeah, you do. Usually I wait till after the 13F is out. So, you know, so on and so forth. But I see this as a great opportunity because they're the majority owner of Match.com, and Tinder has been, you know, it's a gold mine. Millennials cannot date without an app. So we see this as a, you know, monopoly on the social lives of young people. And the value of Match and the other assets of IAC is actually substantially higher than IAC's stock price. Meanwhile, they've already said they're going to spin out the business Match to its shareholders so that that value can be realized. So you've got first a discount of a sum of the parts thing. The second thing is Barry Diller is one of the smartest men in the internet. He's constantly built successful internet businesses, and he just took a stake in a business, and this is what really spurred us, a business called Turo, which is a car sharing company. So IAC bought 25% of Turo, and we expect them to continue to invest more in Turo and take it over. But we see Turo as being a huge potential winner in the car sharing business as we move forward. It's very complementary to actually what Tesla does. Tesla rents a lot of cars through Turo, but we see millennials as not needing the permanence of ownership of a car.
How about the millennials? Are they interested in buying Disney stock? That's been one of your picks. It had a lot of momentum. It's since pulled back a little bit. But Disney Plus, Disney theme parks, Disney blockbuster movies, and we still have probably a few more ahead, such as Star Wars. You still like this one, right?
Not only like it, it's our top pick. It's my biggest investment right now is Disney. I'm all in actually, because we made a ton of money on Netflix over the years because I think streaming obviously is the way people want to consume content, whether it's video game content now or streaming content. So the days of Netflix's monopoly are over, and Disney has the greatest content in the world, whether it's for adults or children. But I've always made a lot of money investing in stuff that children do. That's one of my secrets. And the truth of the matter is everybody's going to sign up for this app. The price point is perfect. And what you'll get, the value will be amazing, but also bundling the app, I think, is super attractive. So Disney's direct-to-consumer division, which is now a separate division, currently had almost $4 billion already for the quarter, and that's basically what Netflix's numbers are. And this hasn't even been valued in Disney's stock at all. And we value that combined business at something like 10 times revenue alone.
Can you
Netflix
give me 10 seconds on Blackstone? I'm out of time, Ross, but I know you like Blackstone, and I really like it too. So give me 10 seconds on Blackstone.
Well, Blackstone is really a play on collecting high fees. A lot of wealthy investors think that if they pay higher fees, they're going to get a better thing. And we like collecting those fees through owning Blackstone. They're one of the largest owners of real estate in the country, and we see them liquidating a lot of these holdings as rates have now come down, and as they continue to pump up asset prices, it's just a pump from rates. Blackstone can now exit a lot of their properties at very, very profitable rates and then generate tons of fees for themselves. And as an owner of Blackstone, you get those fees distributed every quarter. So you have a very nice yield there of around 5%. It does change, but I love getting the distributions and really just taking advantage of the success of Blackstone.
Yep.